So retail sales in January fell by 0.8%, which is much more than was anticipated. Experts predicted that they would fall somewhere between 0.1 and 0.3%. The decline was much larger than analysts had predicted. It's the largest decline in almost a year. Experts said that inflation and the high cost of consumer goods was to blame. They also pointed at the weather. They said that during the cold weather months, people are less likely to walk into retail locations and spend money. Another factor that experts highlighted was the fact that Americans have essentially spent all of their COVID savings money that they got during the pandemic when they were all cooped up in their houses, and the government sent them checks in order to try to revitalize the economy. Another factor that has weighed down on retail spending was the collective debt that American households have accumulated. Americans owe collectively $1.13 trillion on their credit cards, with the average balance coming out to around $6,360 per customer, which are both historic highs. Americans are also finding it harder to pay off their credit card debts because the annual interest rate on most cards is extremely high. They're now at around 23%. Interest rates, of course, have been sky high in the last couple of years as the Federal Reserve has tried to get inflation under control. We expect to get a clearer picture on the retail picture later this month as large retailers, including Walmart and Macy's, are due to report their quarterly earnings.